Okay, so we have our journal entry open, and what I want you to do is kind of follow the motions here with me. And when we check our work, this will make a lot more sense. Debits and credits have been explained in a lot of different ways, and I don't want to introduce the concept simply because I do not want to add more confusion to something that's actually pretty straightforward and can be understood in a trial and error method if you really want to learn it at that very basic level, right? So let's go to our transaction report. This is from our balance sheet, remember? And we're going to see that there was 197.99 paid out on September 1st. So we can keep it simple and we can just go ahead and say each month is each month's. Or what we can really do, right, if we want to display this correctly, is a payment on September would be for August's tax that you collected in sales tax, right? So if we were to look at this month by month, we would really want to reduce each month the sales tax that you collect on this month. We would want to reduce it here rather than reducing it on September 1st. So what we're going to do is we're going to go to journal entry and we're going to select August 31st, 22. We're going to hit our sales tax liability. We're going to hit our income account, which is cafe sales. And here in the debits, we're going to put the 197.99 balance. And again, cafe sales is where we're collecting the sales tax. So where are we paying it off? We're paying it off to the liability account, which is the sales tax payable. This is your journal entry, right? And I'm going to put a description in here, sales tax collected, sales tax paid. And here in the name, we're going to want to put Texas Comptroller. And here we can put Square if we really want, but in this scenario, a name isn't super required. I'm going to change the journal name to be sales tax 22.8. And it's going to look a little weird why I'm naming it like that, but the way that QuickBooks likes to name its journals makes it to where if you name it like this, it'll kind of incrementally work for you rather than have to be something irritating that you have to keep editing. So what I'm going to do is I'm going to hit save here. And I'm going to go back to the transaction report and I'm going to refresh this report. And what you'll see now is that our journal entry lands here where it says sales tax paid. Oh, actually, I should go and adjust my journal entry. So I'm going to change that to collected because that is actually a collection and the payment is something that we did later. So I'll save this now so that it makes sense when you're looking at it. We can refresh this report again. And you'll see we have a journal entry sales tax collected and the balance actually increases and then zeroes out now. So if we were to go to the balance sheet in a separate tab again, and we were to look at the balance sheet as of September 2022, right, from 7/1/22 to 9/30/22, and we were to run this report, we'll see the sales tax liability is zero now, which is good, right? Because we did pay that, but we had to realize where we collected it in the first place, and that's why we had a rolling negative number building up. So let's go ahead and create the next one. And I want to show you how checking your work will really work in this situation. Oh, and just to show you how it reflects in the profit and loss, you see it's 2714 here. If we refresh this report, we hit run report again, you'll see that it decreases by the sales tax collected. And this is true because if you're not considering sales tax as true income, then it should be something that's not really reflecting in your income line, right? So what we're doing with this journal is we're reducing our income line and we're increasing, putting a positive number into our liability line. So we're moving that sales tax that we collected around. So let's go ahead and create the transactions that we need to balance out the rest of these sales tax payments that we made to the state. What we'll do here is for October's payment, which is September, is $708.40. So we're going to go here. And what you can do is you can hit save and new. But the reason why I like to hit save is I like to hit more and hit copy. After you hit copy, you'll see a couple of things will change. You'll see sales tax change to 2022-9. So, for example, if you had anything else here, you had like 9-2022. The original number was actually 8-2022, right? It would have made this a 23, which is why I like to have 2022-8, because then when you make the copy, it'll incrementally increase that to 2022-9. And then because this is sales tax we're collecting in September, we want to make sure we move this up 1 month. And our number again was $708.40. And I know right now you're kind of following along, so you know exactly where to put it. Let's say you mess this up, right? 708 and 40 cents. And let's say for now, we do a typo, right? If you try to hit save on this, it'll know that it's not balanced, and so you have to correct it. And I don't want to get too granular into the details, so I'm not going to explain exactly why this needs to be equal on both sides just yet. That'll be for a whole nother course where we dive into doing accounts payable, accounts receivable, understanding the credits and debits. Right now, again, we're focusing on categorization, reconciliation, and being able to look at the reports and understand the reports. So, again, continuing on this, making a mistake. Let's say you accidentally flip the position of where they should be and you hit save. And when you go to the transaction report, if we refresh this report, and you look at the values, you'll say, oh, wow, that didn't actually zero out the account like it should have. And if you go to your profit and loss and you update this report as well, you'll see that this number went up from what it was before. So we actually obviously did something wrong there, right? So what we should do is go back to the sales tax journal. And let's say you closed out of it on accident. What you can always do is click new journal entry, click on your history, and you'll see all of the journals that you've created. And this will be the date that you posted the journal on. We can go back to this journal and we can flip it. Control of Texas, square, and these exist because we made a copy, right? We don't have to keep typing them in. Then we can hit save, go back to our transaction report, refresh it, let's check our balances over here. It zeroes out now, so that looks like it was correctly done. Let's double check that this is going to reduce, and it did, so we're good to go now. So that's kind of how you can check your work and kind of understand what's going on between the debits and credits. But again, this can be CPA led. So if you really are getting confused and you don't understand how these journals work, let your CPA do it or let somebody that understands them do it before you create a plethora of issues. Because, for example, if you're doing a payroll journal, these payroll journals can be like 10, 12 lines long, depending on if you have employees and if you're doing retirement accounts and a lot of different other things, reimbursements. So ensuring that you understand how to use this is like key before you start messing with these. But in this type of simple situation, you can follow the motions with me and check your work, and you'll start to understand the basis of how journal entries work, which is, again, the entire purpose of this course is to give you fundamental knowledge on how everything works. I'm just going to hit save again just to double check I've saved it. And then I'm going to hit copy so that we can do the October. And we paid October and November, so we're looking for the November value, which is 889.23. That looks good. This looks good. We need to update our date to the next month. Gonna do that. Hit save. More. Copy. And I like to wait to refresh the report. And this is obviously something that's personal. If you really want to refresh the report every single time and be like, yeah, it's zeroed out. I like to see all of the zeros happen at once. So my next one is 751.11. So I'm going to wait until I create all of mine before I go ahead and refresh my report. I'm going to hit save. More, copy. The next one is 750.23, and we can double check that's correct. 750.23. Looks good to go here. That looks good. Forgot to change the date. Always check. Perfect. We're gonna make a copy of this. Go back. We're looking for February 8/27/42, correct? Yeah, 8/27/42. And we're gonna have to change this to 23-1 because this is January 1st. Go, let's save. Or copy. Gonna look for March's, is $1,003.52. This is February 23. Yep, looks good. This looks good. Go ahead and save. Copy. Gonna look for $946.48. 946.48. Good. That looks good. That is good. Or copy. And a 989.97. 989.97. This is in April. Good. 1,074.53. I don't think I hit copy. That was a good catch because I would have saved that and I would have realized later that I'm going to hit copy and I'm going to hit yes without saving because I messed that one up. I realized when I looked at the journal number and the date that it was still 23/4, and I knew if I had made a new copy that that should have been a 5. Um, and so it was a good catch by me. If you had messed that up, you'll notice when you do your review on the transaction report and you refresh it, you'll notice that one of the months just doesn't actually zero out. So you'd go back and check and you'd realize you're missing a journal. Anyways, so that value was 1,074.53. And we did change that date to be 5, so we're good there. I'm gonna hit save. More copies, so I don't forget to do that again. 1,061.40. I set this to June. That looks correct. Let's save. We have one more to do, which is 1,231.31. 1,231.31. Huh. All right, and then we have to update this date here. And we're gonna hit save and close this time because we finished all of our journal entries, right? So let's go to our transaction report, refresh this, and make sure that everything zeros. Scroll over. Beautiful. We see a 0 at the bottom. And then the other thing I like to do is just make sure, because we're doing this month by month, everything should be positive, negative, positive, negative. So we should always have positive balance, 0 balance. Okay. So let's go back to our balance sheet and look and see that we have a beautiful $0 sales tax liability because we've paid all of the sales tax that we've collected. Go to the profit and loss and we run this report. You'll see this balance is now going down. and we went from about 170 to 160K, which matches that, I believe, about 10,000 in sales tax. So that is kind of making those adjustments. This looks really, really, this looks like a lot. So let's say we really wanted to make it a little more concise, but we want to look at over time. Let's look at quarters. So quarters are, you know, April through June. So this is going to cut my Q3 down because it should be July through September. But since I've set my date to be this, it's going to kind of adjust it. You can see on an average 3-month basis how the business is doing. And what we'll do is we'll export this to Excel in the next bonus chapter, and we will go through and kind of look at some of the calculations we can do and some of the metrics we can assume from the two reports that we have. But let's just make sure we've covered everything in chapter 6. Essentially, we've understood how to do debits and credits at a very basic level and being able to check our entry after we save it to make sure it makes sense. And we've cleared our negative sales tax payable balance by understanding how to do those. And that was basically the biggest part of this. This is more of like a bonus section already in itself, where if you are trying to really learn this type of stuff, this is the basics of how that works. And the next course that kind of dives into higher level accounting concepts will really help you understand how that function works. But for the purpose of this course, learning accounting basics, that was essentially all you needed to know about journal entries. And we looked at the 12-month statement for the profit and loss, and we did a balance sheet comparison for prior period. And again, we can do this again. And now we can see sales tax is accrued here, but hasn't been paid off just at the 31st date because we're accruing it on the 31st and we're paying it off on the 1st. So we see that there's that balance standing, but everything is good as of then. So I will see you in the last chapter of this course.